AM 1450, FM 99.3, KNSI. Welcome to another edition of Taking You Home with VoigtJohnson Real Estate. And of course, you can hear this program every Thursday morning at 7:23, Saturday afternoon now at 12:53 here on KNSI. Brandon Johnson, good morning, sir.
Good morning, Bob. How are you?
I could not be better. We're in the midst of summer. Holy cow.
It's starting to get warm out. It feels like summer.
Well, tell me this. Are you guys busy at all?
It is busy. You know, we're kind of, we're in July now, so there's always that post-spring lull, but we are seeing a lot of market activity, showing requests, new listings, and all of that. And what we're kind of seeing play out is there's certain segments of the market that are extremely hot, and then some that I wouldn't say are a buyer's market, more of a balanced market. And so I think what you're seeing is that entry level, 250 and under, is still very, very tough. And then I would call, you know, luxury homes are selling. We sold, in the last 2.5 weeks, we had $3 million plus sales in our office, which in Stearns County, I don't know that we've had, you know, $1 million plus sales in more than one in a given year in the last few years. So to have 3 in 2 weeks, that's where you're seeing the market. Waterfront, lakeshore, high end. And then entry level is where the demand is very strong. Kind of in that 350 to 5 is more of a balanced market.
You know, I have some family members that are thinking of buying somewhere. They want to find the land and all of that and build and all of that kind of stuff. And they wait and they wait and they wait, and I'm saying to them almost every time I see them, guys, it's not going to get any cheaper. Now, prices, you know, values are still there. I don't see them dropping. I don't see interest rates dropping for a while. What do you think?
Yeah, no, we've touched on this before, is values have still held steady and in a lot of cases increased, even with interest rates more than doubling. So that when and if interest rates even come down in a small increment, you're going to see values, in my opinion, start to go up even more. So I would agree with you that values are not, generalizing, are not falling anytime soon. Which leads to another dynamic that we're starting to see, assumable mortgages.
You know, you brought this note in, and I have not seen that phrase, assumable mortgages. It's like, I used to have hair back then. Right? So assumable mortgages, how do they work?
So essentially, a seller has a mortgage on their property, and a buyer can assume that mortgage if they qualify. And there's really 4 factors that need to be, that the stars need to align for the market to bear assumable mortgages.
Okay, before we get to those 4 things. Mortgage rates right now, I'm just going to toss out there. I don't know if they're higher than 7, a little bit lower than 7. So let's just say right around 7. Historically speaking, that's about the average, right? Okay. 3%, 3.5% is unbelievably low. I mean, obviously less than half. I can still do that math. But when it comes to assumable mortgages, I could see where if someone needs to get out of their house and they've got a 3.5% or 2.5% or whatever, holy moly, if these things are assumable, boom. Done.
And so in my estimation, that's why I said there's kind of 4 factors from my perspective that the stars need to align for all 4 of these factors to come into place for assumable mortgages to be practical in the marketplace. The first one is what you alluded to, is we have to have significantly higher interest rates currently than in the previous 3 to 5 years. And that one is a no-brainer, right? We're hovering around 7, and just 2.5 years ago, we were at 3 or even lower in some cases. So that one checks the box automatically. You have to have a balanced market or a buyer's market. And what I alluded to in that 350 to 500 is more of a balanced market. You're not competing with numerous buyers for every listing. When you get to 400,000 or 500,000, the average days on market is 70 to 90 days. So it is a balanced market, right?
And it used to be 70 to 90 days. I recall that very well.
And that's a balanced market. And then the third factor is you have to have, there has to be circumstances where a seller's motivated to give up that 3%.
Job transfer, something like that, right?
Outgrowing the home, a variety, relocation. There has to be a motivation other than, I just want a newer, nicer home. Because for the most part, people aren't willing to give up that 3% interest rate. So there has to be, the third factor is there has to be a situation for that seller where they need to sell for whatever reason, that they're willing to give up that low interest rate,
Okay,
right?
I bet cash really enters into this as well, does it not?
Yeah, and so the fourth factor is, and we'll get into this a little specifically, is the buyers have to have that down payment. The buyers coming to assume that mortgage have to have a significant chunk of cash, because they're assuming whatever the balance is left. So if the home is $450,000, the sellers might have a mortgage balance of $325, somewhere in there.
Right.
So you're assuming whatever's left, right? So you have to bring that $125,000 to the table, and so the buyers need that, and that's a necessity as well too.
So is that a cash kind of thing? Can that be rolled into your closing, or does that all have to be right here, right now?
You would have to bring that in cash, but if you think about what's happening, the dynamics here, first of all, let me back up. If you're assuming a loan, let's just say $450,000 at a 3% interest rate, your monthly payment is going to be almost equivalent to buying a $300,000 home at a 7% interest rate.
Right.
That is a huge increase in value. So that's the benefit and why you would do that. But let's just say it's a $450,000 home.
Okay.
You're more than likely selling a home that has increased in equity as well too, and you're going to have the funds, the equity in the home you're selling, to put down and make up that gap difference.
All right. Now, we're going to continue this conversation. We are not done yet, but we are kind of running out of time. Assumable mortgages, for gosh sakes. Hadn't heard that phrase in a long time. Brandon Johnson, if we want to work with you at VoigtJohnson Real Estate, how do we do that?
320-774-2400 or at VoigtJohnson.com.
More on assumable rate mortgages. And by the way, you are not a lender, are you?
Correct.
All right. Very good. Just wanted to make sure. VoigtJohnson Real Estate. Don't miss Taking You Home, folks. Thursday morning, 7:23. Saturday at 12:53 on KNSI. Brandon, thank you.
Thank you.